Well, life-changing buying opportunities could be ahead in XYZ, formerly known as Block, MicroStrategy and Nvidia, but maybe not just yet, while all eyes are on vaccine maker shares, which are surging. We cover why and the stocks you need to watch. My name's Jessica Remy, a market strategist here with Mumu. It's great to have your company. Happy Monday. Well, US and the Australian share markets are bracing for a large pullback. On the weekend, on the Friday session, on our Saturday, we saw US tech stocks wipe off $721 billion in market value. US big tech stocks, as tracked by the NASDAQ 100, fell 2.1%. The S&P 500 fell 1.7%. So here we are. It's the 5-year anniversary of the COVID peak, and now we have fresh concerns about a new coronavirus being discovered in China. So investors are buying into COVID vaccine makers, and they're selling out of cruise lines. That's what we saw on Friday, seeing cruise line stocks tumble, and we've displayed that on the screen, the likes of Royal Caribbean falling heavily. What is also happening is something that is really important to note. All this is happening at the same time as the US economy now growing at its slowest pace in 17 months. Inflation concerns are continuing to rise, and so are tariff concerns. Plus, we do have this week more US inflation data to be released, and there's Fed speeches, of course, while people are probably bracing for potentially bad and disappointing news. And that's why we've seen the market's fear gauge, known as the VIX, surge. Secondly, and really importantly, the technical indicators are now flagging very bearish signals. The S&P 500 on Friday fell below its 30-day moving average. Now, bear with me. I just want you to just note the last time that this actually happened was back in December 27. And then the market fell about 4% to a new low. We also saw high growth tech stocks tumble when this technical indicator was triggered. We saw Nvidia fall about 6% to a new low. MicroStrategy also fell 15% the last time this technical indicator was flagged. And here we are, we've got Nvidia's results out this week. So investors are bracing for a market shock. But bets are on, remember, as we said in our most traded stocks of the week on Friday, which you can check out on Instagram. Bets are on this week that Nvidia's results could swing their shares in either direction. So a 7% gain could be seen if Nvidia delivers better than expected results. And of course, a 7% fall might be expected if they deliver a disappointing results and outlook. MicroStrategy, formerly known as MicroStrategy, now Strategy, their shares are looking far more bearish than Nvidia. It's really important to note that they actually fell under their 100-day moving average. That's a pretty bearish signal. The concern is that their shares could fall now 21%, just like the last time they fell under their 100-day moving average. So that pullback, last time that they fell under their 100-day moving average, saw their short shares fall to $113.69, and then their shares rebounded almost 300% to $504. So all I'm simply saying is investors will be watching to see how low stocks like MicroStrategy can go before potentially buying in, expecting a recovery. That's something for you to consider. It could be a life-changing investment, but that's up to you and your strategy. As for stocks to watch this week, there's plenty to go through locally. NextDC, Life360, WiseTech and Iress, they're Australia's biggest tech companies, and they all report results this week. And of course, XYZ, formerly known as Block, keep your eye on that stock because it fell in the US session on Friday. It fell 18%. That's its biggest ever pullback in about 5 years. So this is a stock to watch on the ASX. It's the US, the Aussie listed version that tracks the US stock. So what is going on? Well, it's really interesting to note that Block actually reported revenue surged to an all-time high record of $6 billion and far better profits, thanks very much. Profit margins actually rose significantly. So their profits are now up 14%. The reason the stock sold off was because one of their business units called Square, that terminal, is facing increasing competition. But do keep your eye on this stock. Their shares will probably recover at some point. particularly because the company reiterated that they see profit growth of 15% ahead, and that's more than what we just saw the results on Friday. Also note that their key division, the Cash App, that's continuing to grow. Profits actually grew 16% year on year, and the CEO Jack Dorsey came out saying that this company is going to see unexpected upside in the year ahead because the company is rolling out Bitcoin mining systems such as Proto in the second half of this year. And they're also continuing to grow users on their Cash App and profits as well. Plus, they're rolling out other Bitcoin offerings. So, sure, you might see selling pressure on the Aussie share market and the US, particularly because it's fallen below its 100-day moving average. So, you might not see dip buying today, but do keep an eye on this stock. Perhaps throughout the week, you might potentially seeing investors buy the dip. But of course, there's always a bull market somewhere. While we're probably going to see investors rotate out of tech and consumer discretionary, we'll probably see buying into those more defensive sectors on the Aussie share market this week, such as staples, healthcare and utilities. Also keep an eye on gold stocks as well as some Chinese tech stocks. And we covered those on Friday in our weekly. Thanks for your company. Have a great day. Stay safe. Happy trading.